Let's keep going up. Let me restart there. What is going on, everybody? Let me know if you can hear me. I assume y'all can hear me. Maybe, maybe not. Put the comments. Just let me know real quick. All right, we'll get going here in a second. Oh my God, this is making me slow today. Sorry, I'm trying to mark the chart real quick with the levels we're going to talk about. Trading viewerships moving incredibly slow for me today. 60, 8, 80. $68.45. All right, we can get going here. So, yeah, going through pre-market prep real quick. For those familiar now with Gamma Edge or options market amount analysis, that's what we do here. We analyze the options markets, whether you're independently of if you're trading options or not, doesn't really matter, right? Just kind of size, prevalence of options and their impact on today's modern market structures. It's important, we think, and a lot of people in the market think that understanding kind of what positioning and the options market is like. There's some key insights for our trading that can be derived from that. So with that said, right, always starting with the market trend model. In the long term, we're below the longer term moving average ribbon. Not a great sign. Remember, that's a key gate for our two mechanical strategies to the long side. Both of those are turned off right now because that bullish momentum indicator, for lack of a better term, is turned off right now. So until the cumulative tick, which is derived from the tick index, until that gets back above the rainbow moving average ribbon, there is no trades to the long sides from a mechanical point of view. Talked about it last night in the open mic. Think of swing trading kind of as a dimmer switch, obviously fully cranked to the max or, not cranked at all. Right now, this is, telling us that it probably makes sense to have it more dim than more bright right now. There was a little bit of a slight impulse, right, Friday afternoon corresponding with some call buying, but, it's still relatively weak in a vacuum. Now, we could ramp today. That's completely possible that the bullish momentum indicator turns back on, all that good stuff. But, right, that's why the market opened. That's why we watch this, because right now that's not the case. But it certainly could be the case today, or we could continue to roll over. Right, just kind of a fickle time in the market right now. So I'm going to wait for more evidence until, wanting to commit capital to the long side. If you want to try and get in early, that's fine on this gap up. But, I'm going to wait just to see, if the moving average flips, if we get some filter tick buying, all that good stuff. So, yeah, it's kind of how I'm thinking about it. Oh, damn it. My bad. No, I wasn't sharing the screen. Sorry. So yeah, here's the market trend model again, what I was just talking about. You got the rainbow ribbon, you have the cumulative tick, bolded white line that's trending below, railroad tracks trending below, longer term moving average ribbon, right? This means that our bullish momentum indicator is turned off. So again, everything I just said, mechanical strategies are not permitted to enter long positions right now, all that good stuff, right? And by the Mechanical strategies, I mean the P transit plus Gex strategy, right? That kind of underpins everything in game edge that we do. And then the wheel strategy we talked about last night, how we going to have a poor man's covered call strategy coming out sometime as well. And then most other, right, common option strategies with the Gamma Edge overlay, we can improve them a bit. So we're going to be looking at, continuing to build those out. I'm just going to make a quick note of that real quick. So if there's any common option strategy you guys like to run, the wheel, poor man's covered call, I don't know, whatever else there is, let me know. All right, so we got that. Going into the game plan itself, right? Market share model, everything we just talked about, looking at SPX-A. Remember, SPX complex is broken up between the AMs and the PMs. AMs is the cruise ship. That's where, a significant amount of the speculation lies. Here we're just looking at the monthly expiration for this month. Key line in the sand, 68.80. That's been the key line in the sand for a long time. That's the top of our transition zone. You can see as we start to work in the transition zone, right, there's just kind of a back and forth between positive and negative speculation. So we're set to open, I think, right above 68.80, like 68.90. Something to be cognizant of there. Yeah, and again, right, just the higher we move up from this level, the more out-of-money call support we have under us, meaning those out-of-money calls are being captured to in the money, and then that flips kind of how they're from decaying to 0 to limiting to 1. Those are positive flows, so just something to be cognizant of. True zeros looks fine, spot price above that, both trending higher. Gex ratio looks fine, above 1, trending higher on a one-day basis. It's kind of right in the middle of the range, so, neither good nor bad there. That's fine. Delta balance looks fine. The 116 looks a little weak. Just because, the right-hand plane is below 0. That simply just means the right-hand plane, that's either out-of-money calls in the money puts. Right in game edge, we believe that out-of-money call speculation is what drives speculation. Sorry, I just getting a phone call and just trying to see who it was. Give me 1 second, please. All right, I'm back. Sorry, that was my wife making sure everything was all right there. Let's move on to SPXP. So here we are looking at, we'll just show this on my dashboard. Right, full complex. Something that we like to do, introduce feature, right? This is looking at the top quartile of expirations, meaning these are the expirations that matter. This is where the bulk of speculation sits. You can see there's 74% of all speculation in the SPXP complex is sitting in these specific expirations. We can see right top of the transition zone, 6880 corresponds exactly with the SPXA full complex transition zones, or sorry, not the full complex, but the January. So right, all that to say, 6880 is just a very important level. We want to see spot price clear above 6880. We want to see the market trend model start to resume higher, and then we can start to crank up our dimmer switch, right? So it's kind of a progression of the kind of multiple factors we have in the model, or the mosaic approach, right? So hopefully that makes sense. So looking at that, really not a ton else to say right there. 6880, what we want to be above. Looking at 0DT specifically, we can pull this up, right? We have our transition zone. So top of the drunken tether range is right at 680. So again, confluence at that level. No surprise there. Let me just confirm that. Yep, 6880. Bottom of the drunken tether range is at 6845 in the transition zone, right? 6860, 6855. Going back here, right? So the way to think about that, there's two different things you can do, right? The more aggressive approach is outside of the DEX transition zone. You can play for moves up to the top of or the bottom of drunken tether range, then move through that level, or treat the entire drunken tether range as a chop zone. And then once we clear that upper or lower bound, then start to play for a directional move, assuming that we get the intraday volume to support that move. By intraday volume, if you're not familiar with how we track that, I'll go over that in a second. So hopefully that makes sense. Looking at the upside level, 6890 plus GEX on the session, 6900, obviously kind of a big gamma glob here. That is also, just kind of a key psychological level between 6895, 6905, 6900. So that's gonna be another key upside level. And then right, if the market's feeling pretty spunky today, 6950 is kind of a reasonable upside target of what we see. And really above there, like there's going to need to be, a massive amount of call buying to continue to sustain us higher. You can already see kind of up in these levels, put speculation is basically non-existent. So really that's not really going to be fuel for us in terms of those positions being closed, pushing us higher. That's where we're going to need to see that intraday volume, spike higher and kind of be sustained. So basically the opposite of what we saw on Friday, right? Friday was a very choppy action in terms of the call and put speculations in the 0DT complex. Really what you want to see is kind of the signature from, 2 o'clock to 3 o'clock where, calls trending higher, puts trending higher. Really want to see this behavior throughout the session today. So, right, that's kind of the simple checklist. 0DT is right above the transition zone, market trend model trending higher, volume, intraday volume trending higher as well. Does that make sense? You guys tracking with that? Obviously, right, there's a ton of other, let me get to it. It's kind of a robust, right up on, the kind of 5 or 6 core levels that probably 5 or 6 core levels we're looking at. You guys are feel free to read through that, but I just kind of hit on the main ones. Then obviously to the downside, first off, we're not able to hold 6880. That's kind of key information there. So it's higher, should continue to move higher. And if we fail, then, that kind of ruins that directional thesis. Likely going to go back in here, trade, chop around. And then if we lose 6845, obviously not good. That would likely correspond with some, continuation of selling. So just want to be cognizant of that. Does that make sense to everyone on here? Looking at the P2P portfolio, right? We're not entering positions, right? Because the market trend model is turned off right now, the DC3 plus signal. These are names that are triggering, all else equal, right? But we're not entering those, and the system does not have us entering those. But if you're looking and itching for things to enter, then that is something you guys can look at there. Then we obviously have the wheel strategy. We have that scan as well, right? So you guys can look at those names. But again, from a mechanical point of view, not entering those names. Then myself, let me see. I had these positions on Friday. I think I have Amgen is all I have left on. I've entered, exit a lot of these for profit. Got out of Visa, got out of Square for a very small gain last week. CRM I got out of. Oh, I got out of Google on Friday. I forgot to post that one. So yeah, I'm pretty sure I'm just in. Wow, nice rip off the open. Yeah, so just in Amgen right now. Looking at the Mag 7 real quick. Oh, crap. Sorry, so looking at the Mag 7 real quick. Apple trading within prior day range. Tesla prior day range. NVIDIA trying to break above the highs of Friday. So, relatively strong there. Microsoft getting smoked on the open. Almost trading below prior day low. Google, a little bit of weakness at the open. Amazon, some weakness at the open. Meta, Palantir. So yeah, net, kind of the big boys are, relatively weak here. So just something to be cognizant of there. But, keep in mind, Friday, we saw a ton of, I guess rotation, for lack of a better term, where, the mega cap growth were, getting smoked a little bit, but the rest of the market was rallying. So, evidence of a little bit of rotation there. So just something to be cognizant of. $6,900, kind of more or less at, right? We talked about that was a big Livermore level, gamma glob between there and 69.05, 6,900. So just be cognizant of those levels. Let's see, we can just go, let's look at some core stocks here. So you got NVIDIA, trading well here, nice gap up. Tesla, trying to get above 0 GEX, trying to get above N-Trans. If we go look at Tesla right now, yeah, kind of 450 key, kind of top of the, yeah, that's top of its transition zone, right? We just have some little nodes here that are messing with the GEX algorithm, which, on a scientific basis, this is correct, but, artistic point of view, yeah, 450 is a critical level in that name. So let's see if we can hold that 447.50, right? That's plus GEX, that's 0 GEX, makes sense. So again, another key level you want to see hold there. But yeah, just make sure you're not faked out with this gap up, right? You want to continue to see evidence of, filter tick buying coming in, market trend model, railroad tracks moving higher. That's what I want to see to, right, crank the dimmer switch. Just be cognizant of that. Palantir failing right at P-Trans, not crazy to see that. AMD, continuing to ramp higher. Not really a name I'd be entering right now, just given the consecutive gap up days. Hood, still like these institutional moving averages that folks pay attention to, still below all those. So, right, not really interested in that. We've been over Apple. It's getting smoked here, breaking below prior day low. Not great to see, losing those institutional moving averages, all that good stuff. So, be careful if you're in that name. Don't really have a ton to say about its structure right now. Amazon, it's just kind of in a chop range right now. You can see that clearly. Not a ton to do there. Take that off my watch. Just take that. Clean up my watch list a little bit. Google, relatively strong name. I don't see a trade in the name right now, but looks fine. Microsoft, I mean, that's just super ugly there. Not very interested in that. Oracle, nasty. AVGO, nasty. Meta, I mean, nothing to say there. Just consolidating right now. Uber looks nasty. Coin, pretty brutal. Obviously having a big gap up today, but it doesn't really matter. XOM, wow, that's a big old move right there. JPM strong. Square holding P-Trans at the open. Breaking above prior day high. So this looks relatively strong name, right? Kind of like the look of that. I know I got out early on Friday, or not Friday, but earlier in the week. I mean, I would have taken a stop on Friday just given this nasty price action, but this is pretty something good to see, right? When you kind of the dip gets bought on Friday, then we're breaking above Friday's highs, holding P-Trans. So honestly, kind of the low of today is not a bad kind of spot to risk against if you're interested in something. Yeah. Let's keep going. Visa. Not much to say. Lily, not much to say. TSM. So I guess mooning a bit. MSTR actually not going down for once, but this is still like absolutely dumpster fire. United Healthcare. I mean, just consolidating right here. Maybe see if we get a push higher. Hims, Walmart, American Express. AXP. Yeah, so name looks fine. I mean, really, we want to see it get above 4 or 390. That'd be more ideal. Yeah, it's kind of like all I gotta say about it. You have negative GEX right now at 385. Let's see if we can get above 390. Right, it's the top of the transition zone. Holding well right now, at least. From price action point of view. Good to see Friday, right, get bought up. We cleared Friday's highs. So, you could use Friday as like a stop or, risk against Friday, risk against the low of today, something like that. But yeah, higher low put in. Well, probably a lower high actually, but yeah, I mean, the name doesn't look bad. Just these, gosh dang, MU is crazy. ASML, wow, it's a huge move. Acto only been on Rocket Labs, Schlumberger. Gosh. Oh, I wonder if that's because of the Venezuela stuff that all of oil is getting pumped. Probably makes sense. Yeah, I'm just not seeing a ton of super interesting names right now from a trading point of view. So all right. Well, we're going to call it there. SPX kind of middling around that 6,900 Gamma Glob we were talking about. So that's going to be a key level of reference right now. Looking at the market trend model, seeing evidence of a little bit of an uptick, but keep in mind we're still 20 minutes in. We like to wait till the book clear, or we're 10 minutes in. So we like to wait till around 10 o'clock to see what the book's doing, all that good stuff. So All right. Well, I appreciate the time, everyone. We will talk later. Adios.